Most traders see a level break and instantly treat it as support or resistance. And most of the time, they're wrong. Today, I'll show you the one thing that boosts the probability of a broken level to actually hold, and why a single gap imbalance is never enough on its own. In front of us is last Friday on crude oil futures. The overnight session finished at 8:30 a.m., and we're now at the point where the regular defining range opens at 9:30. You had your prep time in the 1-hour transition window before this. And as a DR trader, the focus never changes. Highlight the previous DR levels from at least 3 weeks back. Mark the relevant volume and gap imbalances. Check which models are still valid, and read the current state of the market through the DR structure. What do you see in terms of DR models? The DR downside model was invalidated very early, when the overnight session opened above the aftermarket session. With the regular DR session opening lower than the ODR, the DR upside model is off the table too. So both directional models are already gone. And the ADR mid and the low were both broken during the transition window, with price filling the open volume imbalance that formed in the aftermarket session. But the ADR mid, why does that one matter so much? Because breaking the aftermarket mid drastically raises the odds of a range expansion model or trumpet-style price action for the rest of the day. Note that down. I can't say it enough. The ADR mid is one of the most important intraday levels in the whole DR-IDR cycle. Study it and you'll find a lot. So what else do we have? Several gap imbalances from previous days and from the current aftermarket session. The aftermarket gap imbalances are vital points for intraday price action. They stay relevant through the entire DR-IDR cycle. This time I've highlighted them in dark blue. Now let's check the structure through the previous DR session levels. You know this process by now. Same as always. We find the darker shaded areas where several previous DR levels overlap. Those carry far more weight than a single lonely level. There's one sitting on top of the overnight session. That's where price dropped from. And 3 more below. But look closer, because there's something else. Price is trading below this darker area now. Broken and retested. So the state of the market for now is down. The next resistance is the lowest darker area. And price is caught between the two. The RDR starts. 10 minutes into the session. Where do these two candles trade into? Price is in a critical spot. If it breaks this darker area, we can assume it wants to price even lower. Then, with the 10 a.m. candle, we step into a potential 10 a.m. reversal time window. What would give you a reason to short here? All 3 DR boxes, measured from the highest to the lowest 5-minute close, now expand each other in size. That makes the DR range expansion model fully intact. We can already forecast 1 standard deviation before the DR box has even finished. That's a minimum target to aim at. Then the time, 10 a.m., then the ADR high, the previous day's RDR high, and other DR levels stacked above, and finally, an intraday gap imbalance from the aftermarket session getting rejected perfectly. And before we even think about pulling the trigger, one rule I hold myself to every single session: 2 trades maximum, no exceptions. That's the discipline that stops one bad day from turning into a disaster. That's a real opportunity, worth risking 1 R to make a potential 6.6 R. And the stop sits safely above the aftermarket high and the other key levels. And then, with the very next candle, price stops you out. That sucks. But it was still worth the risk because so many things aligned. And that's trading. Risk management is everything in these moments, because there is never a 100% guarantee. Even with 100 confluences, a trade can go against you. That's the game. So let's see what else this session has to offer. The first hour of the regular session closes at 10:30. Shot 1 is gone. 1 bullet left. Patience. Let the market show its hand. Price is still trapped between those 2 darker areas of previous DR levels. And the DR box closed green. The close higher than the open. That gives roughly a 70% probability of a long confirmation following through. Then, with the first candle after the first hour, something reveals itself. Price is already showing strength. It wicks above the DR high and closes above the IDR high, which is the red dashed line. That's a crucial detail. So get ready for a potential long confirmation. And just 5 minutes later, there it is. A long confirmation for the session. What else happened? Price broke above the darker shaded area right here. And ideally, from now, you want continuation without dipping back below it. The DR structure has shifted to the upside here with a high probability. And here's the piece that supports the whole idea. The intraday gap imbalance has now been broken to the upside. With the long confirmation and the darker shaded area on top, it should act as a barrier for the rest of the session. And that is the lesson of today's video. A single gap imbalance on its own is not a strong enough reason to assume that once it breaks, it flips into support. On its own, it doesn't. But look at what we've got stacked now. A green DR box followed by a long confirmation. A broken area of overlapping previous DR levels. The aftermarket gap imbalances broken to the upside, now acting as a barrier. And a target of 1 standard deviation from the range expansion model. That combination is what turns the upper area into a strong confluence zone. A broken gap imbalance alone can't become support. The models, the structure, and the key levels of the DR-IDR cycle combined are what unlock that power, never one thing alone. Now watch how fast the confirmation moves. With the very next few candles, price wicks aggressively into the zone, rejects off the closing price and the gap imbalance, and closes back above the darker area. That happened quickly, you might have missed it live. But with a limit order resting at 3R at the DR highs and a stop covering the levels nearby, including the aftermarket mid, price would have filled you and gone on to reach the target and beyond. So this is what you as a DR trader with the basics down should be able to see, with enough backtesting and screen time. Re-engineer sessions exactly the way I did here. Build these patterns into your brain so you recognize them early when they show up live. Have a clearly stacked high confluence zone for your decisions. Never one single confluence alone. The DR basics offer so many gems. And if the DR basics alone aren't enough for you, my academy door is open. That's where the other 90% of information are waiting for you. Have a great trading week, and I'll see you in the next video.
We're gonna take on the world.